Hello everyone, myself Anuj Kumar from BCom department, IIMT College of Management. Today we are discussing about the income tax provisions for the financial year 2023-24. An overview of income under head salary in old tax regime versus new tax regime with TDS provisions, deductions and its due date and penalties of the TDS submission by the employer and its filing by the employer point of view. So we started with the calculation of taxable salary income under the old tax regime versus new tax regime of section 115 BAC. The income under the head salary shall be taxable on a due basis or receipt basis, whichever is earlier. Salary due from an employer to an employee, even if it is not paid during the year, shall be chargeable to the tax. If any employee receive the salary on 31st March, but it to be payable on 1st March, then it is taxable on 1st March. If he receive on 31st March, but it is shall be due on 1st April, then it is taxable on 31st March. This is the provision under the behind the salary by the income tax in the both provisions, that old tax regime versus new tax regime. The next is computation of gross total income under the if any person has salaried income, they have many incomes beyond the salary, like income from the salary, income from house property. If the any house property rented by the person to the any other person for rent purpose. The other head is income from the capital gain. If he have any capital gain short term or long term, then he is also compute on in the gross total income. Behind that, the income from the other source is also included in the gross total income of the salaried person. So we compute on gross total income on behalf of the employee of assessee have income from salary as well as house property as well as other source income. We don't consider the capital gain in this calculation. Income from salary calculated first is the allowances received by the person. In addition to the basic salary or the DNS allowance, that is DA. Second is perquisites. If any employee receive any perquisite from the employer, it is taxable under the head salary. Profit in lieu of salary. If any employer share the profit in lieu of salary to the employer, then it is also added in the income of the salary. That is fourth is retirement benefits. If any person receives the retirement benefit after the retirement from the company, it also added in the income from salary. Fifth is pension. If any person has received any pension fund from the any employer on behalf of that retirement, or the dependent person receive the any pension from the employer of the dependent person, that is also calculated under the head salary. Entertainment allowance. If any employee receive any entertainment allowance from the employer, it is also taxable under the head salary, that is entertainment allowance. Employment tax. If any person receives if any employer paid the employment tax on behalf of the employee, it is also calculated to be taxable under the head income from the salary to the employee. Standard deduction. If any standard deduction is given by the employer to employee, it is to be calculated income under the head salary and it to be deducted from the income from salary. Fourth is professional tax. If any professional tax is paid by the employee, then it is to be deducted from the income from salary. That last is HRA under section 10, subsection 13A. If any person receives the HRA, then the person is is the to receive the HRA exemption under section 10 of the Income Tax Act 1981. from the income from salary. The second head income is income from house property. In this property, in this case, we firstly calculate the gross annual value, then we less the municipal taxes paid by the employee, and not on the due basis, it is to be deducted on the paid basis. However, he paid in advance or in the not paid from many years. Net, then the calculated value is called the net annual value less standard deduction. If the property is self-occupied, if the property is self-occupied by the employee, then NAV is considered to be nil. Then the less standard deduction from the NAV under section 24A, that is the fixed by the government 30% of NAV. If the employee self-occupied the house property, then it to be considered to be standard deduction, that is nil. Second deduction is interest on borrowed capital under section 24B. It is same in the let out or self-occupied case, but is subject to maximum of rupees 2 lakh rupees. Then the calculated value is called the income from the house property. The third is last income from other source. There are many incomes that are not taxable under the any head, that is income from salary, income from house property, income from business profession, income from the and long-term capital gain. Then it is taxable under the head other source. That are many incomes like income from bank, dividend income, family pension. Other incomes are also taxable from the income from other source. The total of all heads incomes is called the gross total income. The next is the lowest of the amount can be claimed as HRA exemption under 1013A. Here we see the HRA deduction. In previous slide, we discussed the HRA deduction, which to be claimed as exemption by the employee from the income. But how much amount should be exempt by the government? The lowest of the following amounts can be claimed as HRA exemption. Number first limit is actual HRA received by the employee from the employer. Second point is 50% of basic salary plus DNS allowance for those who living in metro cities like Delhi, Kolkata, Mumbai, and Chennai. Or 40% of the basic of salary plus DNS allowance for those who living in non-metro cities other than Delhi, Kolkata, Mumbai, or Chennai. The third point is actual rent paid minus 10% of basic salary plus DA. From the all 3 points, lower of 3 points, the amount is eligible for exemption by the employee in the calculation of salary taxable. The next is we calculate the standard deduction allowable from family pension. If any person receive family pension on the behalf of other employee from the employer to employee, like a widow pension or the dependent pension, then the 1/3 of the person subject to a maximum of rupees 15,000 will be allowed as standard deduction from the family pension. If any person receive the family pension on behalf of the dependency, then the amount received into 1/3 of pension subject to a maximum of 15,000 is allowed to be as standard deduction from the family pension. The next is deduction allowable from the gross total income. A deduction is also allowed from the gross total income. Then the taxable calculate income is called total taxable income. If any person receives the salary, capital gain, house property, or other source, then it is called income from gross total income. Then we also claim the exemptions and deductions under section 80C to 80U. Then we calculate the total taxable income. The sections are as follows: 80C to 80U. The first is 80C. Income tax deduction for financial year 2023, assessment year 2024-25. ATC describe the investing into very common and popular investment option like LIC, PPF, Sukanya Samriddhi Yojana account, mutual fund, FD, child, tuition fees, uh, United United Living in purchase, etc. Then the deduction is allowed to that person amount. The deduction is allowed only for the individual or the HUF persons, but a maximum amount is up to rupees 1.5 lakh under the section 80C, 80 triple C, 80 CCD subsection 1. 80 triple C is for the investment in pension fund. If any person invest in pension fund, that is eligible person is only for individuals, then the deduction is called under the 80 triple C section. Then the other section is 80 double CD subsection 1, Atal Pension Yojana and National Pension Scheme contribution, that is allowed to the individuals, but a limit under section 80C, 80 triple C, 80 CCD subsection 1 is up to rupees 1.5 lakh. Next section is 80 CCD 1 subsection 1B, Atal Pension Yojana and National Pension Scheme contribution additional claim. If any additional deduction, a additional deduction is allowed in specific cases by the government up to rupees 50 lakh. The next section is 80D. If any employee spend on the medical insurance premium, preventive health checkup, and medical expenditure for himself or any individual or by the HUF for his family members, then the deduction is allowed to the up to rupees 50,000 for preventive health checkup, 25 for himself, 25 for the parents, and the actual insurance premium, actual medical insurance premium paid by the employee is also checked, also deductible under the section 80D. Section 80DD, medical treatment of a dependent with disability. If any employer has a dependent on dependent person with the disability, then the 80DD is applicable, and it is applicable in case of individual or HUF. In case of individual, any dependent, and HUF on any dependent on the HUF. Normal disability at least 40% or more but less than 85, the deduction is at rupees up to 75 lakh. Several disability at least 80% or more, rupees 1.25 lakh is allowed by the government under section 80 C2, 80U by the 80DD. The next section is 80E. If any employee take the loan for the education purpose of his child, है ना, तो then the interest paid on loan taken for higher education is called the deduction under section 80E. There is no limit. There is no limit of amount of deduction. Any amount of interest paid on education loan is eligible for deduction up to 8 assessment year from the year of repayment or closing period with education loan. Section 80EE. Section 80E, interest paid on housing loan by the individual, by the employee up to rupees 50,000 subject to some conditions applicable for loan section sanctioned between 1st April 2016 to 31st March 2017 before uh, 20 section 24B of the house property is not implement, the 80E is applicable for those loans deductions. 80EA, interest paid on housing loan up to rupees 1.5 lakh subject to some condition applicable for the loan sanction between the 1st April 2019 and 31st March 2022. The next section is 80G, donation to specific fund institutions. All assessee individual HUF company are eligible to take it benefits, take it deduction under section 80G, 100% or 50% of the donated amount or qualifying limits which are described at the time of donation making by the person. Allowed donation in cash up to rupees 20,000. Beyond 2,000, no cash donation is allowed by the government for deduction. Next section is 80GG, income tax deduction for house rent paid. If any person paid house rent, then he is allowed for deduction. If he did not receive the HRA and not eligible to take the exemption of HRA, then he take benefit for the house rent paid under the section 80GG, that is rupees 5,000 per month. First limit. Second limit is 25% of the adjusted total income. Third is rent paid minus 10% of the adjusted total income, whichever is lower. It is in lieu of the HRA exemption benefit. The next section is 80 TTA, interest earned on saving accounts by the individual is exempted up to rupees 10,000 under the section 80 TTA. If any person have income beyond the 10,000, then the beyond part of that interest is taxable only. The deduction is up to rupees 10,000 only. 80 TTB sections, interest income earned on deposit saving FD, individual 60 years or above. If any individual have age a 60-year or above, the deduction on interest on saving account is up to rupees 50,000, sorry. The next section is 80U, disabled individual. If any employee is disabled, then the disability is normal disability. Then the deduction is normal deduction is 75,000, and the employee is have occurred the severed disability. Then the exemption is up to rupees 1.25 lakh. The next part is the deduction allowable from the gross total income in new tax regime. The all deductions we discussed previously, the allowed in the old tax regime, but now we discuss about the deductions in new tax regime under section 115 BAC. The deductions under new tax regime are as follows. Deduction or exemption allowable under new tax regime, also known as alternative tax regime, for the assessment year 2023-24 for an individual or HUF under section 115 BAC. Number first is transport allowance. Transport allowance in case of specifically abled person. Second is conveyance allowance received to meet the conveyance expenditure incurred as part of employment. Any compensation received to meet the cost of travel on tour of transfer. Number fourth is daily allowance received to meet the ordinary charges or expenditure you incur on account of absence from his regular place of duty. Fifth is perquisites for official purpose. Number six is exemption on voluntary retirement under section 10, subsection 10C, gratuity under section 10, subsection 10, and leave encashment under section 10, subsection 10 AA. Number seven is interest on house loan on let out property, section 24. Number eight is gifts up to rupees 50,000 is exempted by the government to the employee received from his employer. Number nine is deduction from for employer contribution to the NPS account under section 80CC subsection 2. Number 10 is deduction for additional employment cost, section 80 JJA. Number 11 is added by the new tax regime. Budget 2023 introduces standard deduction of rupees 50,000 under new tax regime applicable for financial year 2023-24 in lieu of the deductions 80C to 80U. Budget 2023 is also introduced deduction under section 57 subsection second A of family pension income in lieu of the 80 deduction of 80C to 80U. We already discussed the gross total income less deductions 80C to 80U or the other deductions by in the new tax regime is called the net total income of the assessee, and the tax is payable on the total income. The discussion about the computation of tax on total income for financial year 2023-24 here are above. Tax slab under old tax regime, new net income range, rate of income tax. If any person have income up to rupees 2.5 lakh, the rate of income tax is nil. That we call nil nil tax on the income if any person have income up to 2.5 lakh rupees per annum in the sense in a year. From 2.5 lakh to 5 lakh, the rate of income tax is 5%. From 5 lakh to 10 lakh, the rate of income tax is 20%. Above 10 lakh is the rate of income tax is 30%. These are the tax slab under the old tax regimes. Now we discuss the new tax regime, also known as alternative tax regime for the assessment year 2023-24. An individual or HUF has to exercise the options under section 115 BAC 5 to avail its benefits. Net income range, tax rate, net income range up to rupees 3 lakh. There is no tax rate in the new tax regime. From 3 lakh to 3 lakh 1 rupees to 6 lakh, the tax rate is 5%. From 6 lakh rupees 1 to 9 lakh, the tax rate is 10%. From rupees 9 lakh 1 to rupees 12 lakh, the tax rate is 15%. From 12 lakh 1 to 15 lakh, the tax rate is 20%. Above rupees 15 lakh, the tax rate is 30% in the new tax regime. But a surcharge is also applicable to the income for income tax if any person a have living the luxurious life in on behalf of its income. The surcharge is also applicable to them. What is surcharge? Surcharge is levied on the income of income tax at following rate if total income of an assessee exceeding specific limits. Range of income, that is, if any person have rupees 50 lakh to 1 crore income, then the rate of surcharge, that is 10%. If any the income is rupees 1 crore to 2 crore, then the 15% rate of surcharge. If the income is rupees 2 crore to 5 crore, rate of surcharge is 25%. Above 5 crore, the rate of surcharge is 37%. The rate of surcharge is applicable on the tax only. If any person have a tax liability of rupees 1 lakh, the surcharge is applicable on the tax, not taxable income. That is applicable on the 1 lakh only, not on the his total income, that is 10 lakh or whichever is. The second point is health and education cess. Beyond the tax, the health and education cess is also levied by the government. That is, health and education cess is levied at the rate of 4% on the amount of income tax plus surcharges. That is the 1% for the health, 2% for the primary education, 1% for the higher education. These are the slabs of 4% of the health and education cess, 1%, 2%, and 1%. Rebate under section 87A is also by to the taxable assessee by the government. The first point, for financial 2022-23, a resident individual whose net income does not exceed rupees 5 lakh can avail rebate under section 87A. It is deductible from income tax before calculating education cess. The amount of rebate is 100% of income tax or rupees 12,500, whichever is less. The second point, from financial year 2023-24 and assessment year 24-25, a maximum rebate of rupees 25 is allowed under section 87A if the total income of a resident individual who is opting for the new tax scheme under section 115 BAC subsection 1A is up to rupees 7 lakh, and the further is there is no deduction 80C to 80U is allowed in that scheme. The third point is further, if the total income of the resident individual opting section 115 BAC subsection 1A exceed rupees 7 lakh and the tax payable on such income exceed the difference between the total income and 7 lakh, he can claim a rebate with marginal relief to the extent of the difference between the tax payable on such income and the amount of income by which it extend to the income tax on his income. The next is in case where net income exceed rupees 50 lakh but it does not exceed rupees 1 crore, the amount of the income tax and the surcharges shall not exceed the total amount payable as income tax on total income of rupees 50 lakh by more than the amount of income that exceeds rupees 50 lakh. Second point is, in case where net income exceeds rupees 1 crore but does not exceed rupees 2 crore, marginal relief shall be availed from surcharge in case of a manner in that the amount payable on as tax and surcharges shall not exceed the total amount payable as income tax on total income of rupees 1 crore by more than the amount of income tax exceed rupees 1 crore. In case where net income exceed rupees 2 crore but does not exceed rupees 5 crore, marginal relief shall be availed from surcharge in case such a manner that the amount payable as income tax and surcharges shall not exceed the total amount payable as income tax on total income of rupees 2 crore by more than the amount of income that exceed rupees 2 crore. The fourth point is, in case where the net income exceed rupees 5 crore, marginal relief shall be availed from surcharge in such a manner that the amount payable as income tax and surcharge shall not exceed the total amount payable as income tax of total income of rupees 5 crore by more than the amount of income tax exceed rupees 5 crore. TDS rate charge for financial year 2023-24. Before it, we discuss all the point of possible points of salary. Let the gross total income, deductions, new tax regime, old tax regime, marginal relief, surcharges. Then the next point is TDS rate chart. Section 192 is applicable for the nature of transactions, that is salary. The limit is basis exemption limit, that is 2.5 lakh, 5 lakh in old tax regime, new tax regime 3 lakh, 3 to 6 lakh. TDS is as per the applicable slab rate under in the new tax regime or old tax regime, whichever is opted by the employee. 194C is payment done to a contractor or subcontractor if a single transaction if rupees 30,000 and aggregate transaction 1 lakh above, then the TDS is applicable for HUF or individual 1%, then other than HUF or individual, that is 2%. Under section 194I of TDS, if any person paid the rent for plant and machinery, the limit is above 2.4 lakh, then the TDS rate is 2%. If rent is paid for land, building, furniture, fittings, the above the 2.4 lakh, then the TDS rate is 10%. 194 IA applicable for the payment on transfer of immovable property except agricultural land. If any person transfer the immovable property other than agricultural land, the 194 IA is applicable. The limit is 50 lakh and the TDS rate is 1% on behalf of the amount received by the seller. 194 IV is for the rent paid by the HUF or individual which is not required to conduct a tax audit. And the aggregate limit is 50,000 per month, that is the 6 lakh per annum. Other limits are also in the per annum case, but this limit is 50,000 per month, that is 6 lakh per annum. The TDS rate is 5%. Then the 194J is applicable for the fees paid for technical service. The technical service, that is the limit is 30,000 per annum. The TDS rate is 2%. Royalty in nature of the consideration for sale, distribution on exhibition of cinematographic films. The exemption limit is 30,000 and the rate is the 2%. And then the fees paid for any other professional service is also taxable in, and the TDS rate is 10%. We are discussing next is TDS payment due date. The if any person uh, deducted TDS on behalf of any other person, then he shall be liable to the file the TDS return within the due dates. Their due dates are as follows: for quarter ending 31st June 2023, that is quarter one ending, the month of deduction is April. For the month of April, May, June. For the month of April 23 deductions, the due dates for depositing TDS for financial 2023-24 is 7th May 2023. That is the 7th of next month. For May, 7th June. For June, 7th July. The quarterly return is filed from uh, within the next one month, that is the before 31st July. For second quarter ending on 30th September 2023, that is July 2023. The due date of depositing TDS is 7th August, 7th September, 7th October. The TDS due date is 31st October. Here is so on. But in the last quarter, 31st March, January for January 2024, the due date of depositing TDS is 7th February. For February, 7th March. For March TDS, that is 7th March for TDS deducted by the government office. But or other assessee for other deductor, that is the 30th April 2024, and the for this quarter, the that return is to be filled by the 1 month also extended, that is 31st May 2024. All sum deducted in accordance with the provision of um, Chapter 17B by an office of government without challan, treasury challan should be deposited on the same day of deduction. Only for the tax deducted by the government office during the month of March should 24 should be deposited by the 7th April 2024. If any person deducted TDS, then he paid the TDS on next month 7th date. But if any government assessee uh, received TDS, deducted TDS, then it should be same day deduction and deposit should be same day in case of government office. But in last, it is deposited up to the 7th of the next month. Types of TDS return. Form 24Q is filled by the quarterly statement for tax deducted at source from salaries. This is occurred quarterly. TDS certificate form is 16 to be issued annually on or before 15th June of the assessment year for which the income tax return is being filed. Form 26Q is filed for the quarterly statement of tax deducted at source in respect of all other payments then other than salaries, that is frequently filed by the quarterly. Form 16A to be issued quarterly within 15 days from the due date of furnishing of the TDS statement. Form 27 EQ quarterly statement of collection of tax at source quarterly. Form 27D to be issued quarterly within 15 days from the due date of furnishing of TDS statement. The next point is interest on late deposit of TDS. If any person cannot deposit the TDS deducted by them within the due date, that is the 7th of next month, then the penalty interest on that deposit are as follows. Under section 201 subsection 1A clause 1, TDS not deducted fully or partly 1% per month is applicable on that amount from the date on which tax is deductible to the date on which tax is actually deducted. If any person not deducted, if any person the next section is 201 subsection 1A clause 2nd, TDS not deducted to the government after deduction fully or partly, then the deposited to the government. In first case, the person is not deducted actually, but in second case, TDS deducted but not deposited to the government. The penalty is high, that is 1.5% per annum from the date of tax deduction to the date from the tax of date of deposit, not from the date of from the prescribed date of deposit to the actual date of deposit. It is from the date of tax deposit to the date of deposit. It is the penalty for that days. The above interest should be paid before filing of TDS return in the next month. Challans under income tax, that is Challan 280, 281. Challan 280 is used for the payment of advance tax, self-assessment tax, tax on regular assessment, surtax, tax on distributed profit of domestic company, and tax on domestic income to unit holders. Challan 281 is for depositing tax deducted at source and tax collected at source to the income tax department. Thank you very much. Bye bye.